I'm a brown-skinned man, that's what I am. Got a guitar and a drum, that's where I come from. Spirit of the sun, spirit of the sea, worthy of the shadow.
Good evening, everybody. Good afternoon, good morning, wherever you're tuning in from. I'm Becca Economopoulos, Executive Director of the Natural History Museum, and I am so glad to welcome you to tonight's roundtable discussion, The End of Green Capitalism, ? We are live tonight from the People's Forum in New York City and also joined by an online audience on Zoom from across the US and around the world. We're grateful to have you with us. The Natural History Museum is a traveling and online museum for the movement dedicated to social, climate, and environmental justice. Tonight's program is part of our ongoing event series, Natural History for a World in Crisis. It's curated by our cohort of Red Natural History Fellows, who are a group of scholar activists and changemakers. This series brings urgent conversations into the public view, conversations that respond to our current moment, one that, as I'm sure you all recognize, is shaped by overlapping and intensifying crises: ecological collapse, political repression, economic instability, and social fragmentation. At a time when billionaires pull strings from both boardrooms and the White House, and when green growth slogans mask deepening extraction and inequality, we are asking, what now? Tonight's event, The End of Green Capitalism, was co-curated by our Red Natural History Fellows, Ashley Dawson and Kai Bosworth, who will also be joining the discussion. And alongside them are our brilliant panelists, Ajay Singh Chaudhary, who's the Executive Director of the Brooklyn Institute for Social Research, Alyssa Battistoni, the political theorist at Barnard College, and Brett Christophers, professor of human geography at Uppsala University in Sweden. He's going to be joining us via a pre-recorded video. Together, they will unpack what happened to the dream of a business-led energy transition and explore what alternatives we might fight for in its place. Before we dive in, we would love to hear from you in the chat. So please do introduce yourself, your name, where you're zooming in from, and your affiliation or your field, or how you identify. If that's what you'd like to share, that'd be great. We would also love to know what brought you to this event and what are you hoping to take away from the conversation. A few quick housekeeping notes. For those joining us on Zoom, you'll find a Q&A box at the bottom of your screen. So drop your questions there for the panelists at any point, and we'll be looking at those and feeding them to the moderators. So we'll save time for an audience Q&A later in the program. This event is being recorded, so the video and the chat transcript will be posted at thenaturalhistorymuseum.org in the coming days, and we'll email that out to everyone who registered. One correction, the video will be posted on the website, but the chat transcript and the video will be emailed out, chat only via email. Finally, we just want that to feel a little bit more like a safe space. Finally, big thank you to our event sponsors, the Henry Luce Foundation and For Culture, for supporting this work. With that, I will pass it over to our fellows, Ashley Dawson and Kai Bosworth at the People's Forum in New York City, to kick things off and introduce tonight's discussion. And Thank you for bearing with us. These hybrid events are always an experiment. So if there are any hiccups, we appreciate your grace. Without further ado, Ashley and Kai, take it away.
Event, which is a hybrid event, co-produced by the Natural History Museum as part of the Natural History for a World in Crisis series. You can see the image there on the TV screen. I urge you to check out some of the other productions in the series. I'm very happy to welcome you all here in person, and also to welcome the online audience. And I also wanted to thank the People's Forum for hosting us here in person tonight. So turn things over to you, Kai.
Great. Thanks, Ash. Hi, everyone. My name is Kai Bosworth. I'm going to be starting us off just by framing what we're all here to talk about, the looming image, the end of green capitalism, with a question mark. So let me pull up what I'm actually going to say. So yeah, the basic history that we're trying to grapple with today is basically, I would say, emerged in the 1990s, a concept of green capitalism, or the idea that through state subsidies and assistance, businesses could be and firms could be encouraged to act in a more sustainable manner and make partnerships with environmental NGOs along the way to sort of decrease the conflict among these three sort of parts of the environmental world. And so there were nuances, of course, and the varieties of advocacy for a kind of green capitalism. And I can't go into them today. But the idea was that if this environmentally friendly activity became cheap enough, profitable enough, or marketable enough, that coal, oil, and gas would eventually be displaced. And this would be accomplished through things like subsidies, tax credits, incentives, and the use of state-encouraged market mechanisms. So obviously, even back then, everyone acknowledged that the oil industry was like a nefarious player, lobbying our government, denying climate change, using greenwashing techniques and the like. And so even built into the sort of advocacy for green capitalism was the idea that maybe this emerging segment or fracture of the capitalist world, represented by things like renewable energy firms or energy efficiency firms, might be able to do some of that lobbying dirty work in the halls of power that we don't have access to, or that environmentalists didn't have access to. And so I think that part of the problem space that I want to open up today is that green capitalism isn't just kind of like a liberal concept, though aspects of its theory of change are clearly liberal in orientation. I think that even critics of green capitalism, or as well as critics of fossil capitalism, basically have separated these two things from each other. And what we're here to sort of question today, I think, is whether that separation obscures more than it tells us about the shape of environmental processes within markets, within firms, and the like. So all of this is being torn apart right now, of course, but also in some weird and unexpected ways. At some level, we all already knew that green capitalism wasn't going to work. But nonetheless, the way this last year has unfolded has some surprises in it. Some surprises not only with what's being dismantled, but also what I'm going to talk about, what's enduring, what aspects of the green capitalist world are living on, certainly in figures like our electric car company overlord Elon Musk, who basically is shadow president in some sort of way, and one would think that would be good for people who are advocates of electric cars or something like that, and instead it's like hell world, right? So on the one hand, all of these tax breaks and all of this kind of thing are targets for this administration's buzzsaw approach. On the other hand, the tech fantasies of green and fossil industries together resonate with these kinds of new libertarian visions of unbridled national infrastructure buildouts. So this event is going to ask to what extent are we witnessing the end of green capitalism? Are we witnessing a reconfiguration of some of these processes like carbon markets, green finance, infrastructure subsidies, and the like? What new political and economic landscape is emerging? And finally, what might this new landscape mean for the train of struggle that we have to operate on in and through in trying to build a more, some sort of response that can adequately address climate change and the environmental crises beyond that, particularly strategically with working class and left political orientations. So with that, I'm going to turn it back over to Ash for some introductions of the rest of tonight's program.
Great. Thanks so much, Kai. And I should say that Kai and I are both fellows and part of the initial cohort of Red Natural History Fellows. And that's how we come to be associated with the Red Natural History Museum and the wonderful work that they're doing. So joining me and Kai tonight, we have Alyssa Battistoni, who's a political theorist at Barnard College, sitting to my right, and Ajay Singh Chaudhary, who is the executive director of the Brooklyn Institute for Social Research. And we're going to be asking some questions that open up in more detail some of the provocations that Kai just gave us. But before we do that, we have a pre-recorded video to share from Brett Christophers. He did a very interesting interview about the end of woke capitalism on Novara Media that I saw about a month ago or something like that. So we asked him to go over some of the issues that he broached there that bear on this question of whether we are seeing the end of green capitalism. So we're going to show his short video, and then we're going to have some commentary from the people here in person tonight.
Good evening, everybody. My name is Brett Christophers. It's lovely to be with you, albeit pre-recorded and remotely. I'm speaking to you from Sweden. And it's nice to be back at the People's Forum, where I've been at least a couple of times before. So the organisers of this event asked me to do a brief introduction by way of what one of them called a succinct provocation. Which I've taken to heart. So what I'm going to do is take the title of the forum about the end of green capitalism, ? And I'm going to talk about one thing that you could potentially interpret as the end of green capitalism. And I'm going to try and talk about that, what it might mean and how we might understand it. And hopefully what I'm going to say is going to be provocative and open some lines of discussion, but I certainly don't expect it to do any more than that. I'm not trying to offer answers. I'm trying to kind of raise questions for debate. Okay, with that said, what I'm going to talk about, and I'm not going to talk for more than 9 or 10 minutes, is what I think we've seen over the last months and maybe even a year or more now, is what you might call the collapse of ESG. And by ESG, I mean environmental, social, and governance investing. And I'm going to be focusing particularly on the E component of that, the environmental, which I think, frankly, was always the most important component, or is the most important component of ESG. And the basic idea of ESG, for those who are not familiar with it, although I'm sure most people will be, is the basic idea that investors, financial investors, when they're investing their money, should factor in environmental, social, and government concerns, as well as just focusing on trying to maximize financial return. So it's a way of kind of make investment ethical, is for want of a better word. And it really has been a pretty significant phenomenon in one way or another for about the last decade or so. But over the last 12 months, it really has begun to collapse in ways that I'll talk about in due course. Okay, so what I want to do to begin with is to say that to understand why this has happened, it's really important to try to understand why ESG emerged in the first place. I'm definitely not one of those people that waves it away and says, you know, this always was kind of pure greenwashing by investors, no one ever really cared about the environment. This was just kind of a pretense, a veil, if you like. I don't think that's entirely true. I think that clearly it's the case that a lot of what goes under the banner of ESG probably was and is greenwashing in one way or another, but I don't think that was the totality of what was going on. Okay, so I think that when I look back, it seems to me that there were probably three main reasons for ESG kind of becoming a thing, which it really began to do in, I would say, the mid 2010s, so around about a decade ago. So the first of those, and perhaps even the most important of those, is to understand something about how policymakers were thinking how they should go about trying to address climate change, and in particular, ongoing massive oil and gas production, so continuing fossil fuel capitalism. And what I mean by that is that policymakers basically came to the view that it was much easier for them to not actually take action themselves, but to essentially outsource the problem to the financial sector. So the idea there, basically stated, was that financial investors would look at oil and gas companies, for example, and they'd think, okay, we're invested in those companies now, but as we move towards a kind of a post-carbon world, which we assume we're going to be doing at some point in the future, those companies will become less and less valuable. And therefore, financial investors, in their wisdom, will not want to remain invested in those companies. And in fact, they'll try to discipline those companies away from their kind of continuing bad habits, their continuing dirty investment, by, for example, increasing the cost of capital that they make available to them, increasing the price of the debt and the equity that they provide to those companies. So this was the basic idea. Kind of, you can almost contract the problem out to Wall Street, and Wall Street in its wisdom will kind of discipline capitalism away from its dirty fossil fuel habits towards cleaner habits as a kind of risk adjustment mechanism. The second thing I want to say is that the finance sector didn't necessarily want that responsibility. And I think you can actually go back and find some really interesting stuff that senior financiers said around that time to say, hang on a second, policymakers shouldn't be doing this. It's up to politicians to tell companies what to do or what not to do. It shouldn't be up to us. And we don't want that responsibility. However, for the most part, they kind of acquiesced and accepted that responsibility. They probably thought, okay, there might be some money to be made here. And I think in particular, they probably thought there's money to be made in renewables. Oil and gas are going to, eventually disappear over time. They're going to reduce over time as the world changes. And renewables are the next big thing. So if we introduce these ESG funds and ask people to put money into them, they're going to make a lot of money, and we're going to make a lot of money by investing people's money in renewables. And so the late 2010s, probably through to about 2021, was the kind of renewables boom era, not least in America, but not only in America, where lots and lots of money went into renewables. So I think that was the second thing. The ESG was seen as a profit-making opportunity, as well as something that was being offloaded to them. Third and final one was that there was definitely thought to be a hygiene factor in ESG. And what I mean by that was that if you were a big asset manager, like a BlackRock or a Vanguard or someone, I think in many, if not most cases, you thought, well, if we don't do ESG, or at least appear more ethical, more climate friendly, we're going to lose business. There are going to be investors who don't want to give money to asset managers who are not getting on the ESG wagon. You had to be seen to be doing ESG in order for many companies, many investors to want you to invest their money. Okay, but in the past 12 months or so, I think that has changed. All of this has changed radically beyond recognition. Lots of big asset managers have been departing the kind of investment alliances like Climate 100 Plus and Net Zero Asset Managers Alliance in droves. They've been firing the ESG teams, obviously in the belief that they don't need those teams anymore. So there's been this huge volte-face in the last 12 to 18 months, which begs the question of why. And I think there are three reasons for that. The first one, and again, maybe the most important one, is that by around 21, 22, investors discovered that renewables was actually not a gold mine after all. So renewable shares have been performing quite well up until that point, but the last 4 or 5 years now has been one long downwards trajectory for investment in renewables. It turns out that renewables are not a particularly profitable business after all. I think the second thing is that lots of asset managers realized that the fear of capital flight had been overplayed. So yes, there were some pension funds, particularly some public pension funds in some parts of the world that didn't want to do business with an asset manager who was at least giving the impression of taking seriously environmental concerns. But it turned out there were actually lots of pension funds and other investors, sovereign wealth funds, insurance companies, private pension funds, who were quite happy to continue investing their money in dirty businesses. And actually, so what it turned out to be the case was that you could continue to do very, very nicely, thank you, as an asset manager, without kind of getting on board the ESG wagon after all. So I think that's the second thing. And then third and finally, and in particular over the last 12 to 18 months, a whole series of kind of legal and political liabilities have entered the picture, where not only is it the case that you don't necessarily lose money by not doing ESG, you can actually become politically and or legally liable precisely by doing ESG. There have been lots of lawsuits launched specifically in the red states of America, where, for example, the Attorney General of Tennessee took on BlackRock and said, hang on a second, you are not fulfilling your fiduciary duty to your clients. You're not fulfilling your duty to focus only upon maximizing investment returns for them, because you're thinking about ESG stuff. You're prioritizing things like ESG. And in doing that, you are failing to fulfill your fiduciary duty, and we're going to sue you for doing that. So in a sense, things have gone full circle from a situation where you thought you couldn't succeed in the business by not doing ESG to the point where you were taking on very significant legal and political risks precisely by continuing to do ESG. And again, for that reason, you've seen asset managers like BlackRock leaving these climate and more general ESG alliances in droves. So I think that's the last thing I want to say. And I guess the way I'll sum up is to say this. I think that you would probably still see big asset managers like the BlackRocks continuing to invest heavily in genuinely in genuinely progressive environmental commercial propositions, and accepting the legal and political liability that is now there, if they thought the financial returns were available in those businesses that would justify taking on those risks and those liabilities. And I think one of the problems is that they have realized that the returns that are necessary to justify absorbing those liabilities simply aren't there. And so with that, I am going to leave you. Hopefully that's at least some food for thought, and I'm grateful for the opportunity to get to speak to you, and I hope you have a really productive event this evening.
Okay, we're back.
We're back. Okay, great. Hello again, everyone. Okay, thanks to Brett Christophers for that wonderful introduction into the murky world of ESG investing. The big point here, of course, is that the kind of hegemonic system of neoliberal capitalism seemed to point towards a shift towards investment in renewables and in energy transition more broadly in various different forms of green capitalism. states were giving those kinds of signals, and it looked like there was going to be lots of money to be made. The big firms that are engaging in finance wanted to look good at the same time. And so it seemed that was the direction of things. Obviously, we're living in a very, very different world, clearly, with the Trump administration and its policy of energy dominance here in the US. And just, I think 2 days ago, Trump signed another executive order in which he said that states themselves could not engage in any form of climate action, right? So neither on the federal level nor on a more local level can states be sending these kinds of messages to markets. What I think Brett is giving us a sense of is that what the Trump administration is doing isn't entirely new, that, even prior to that, there was a big transformation going on and a shift away from ESG. And the kind of key factor here is the realization that there wasn't a lot of money to be made in these sectors, particularly in renewable energy. And if you'd like to read more of his in-depth take on that, you can look at his most recent book, which is called The Price is Wrong, which really goes into a lot of detail about why the increasingly cheap cost of renewables has not led to a massive build out of renewable energy and energy transition. I wanted to ask you, Ajay, to give us a bit of a sense about some of the implications of the financial realignments Brett was giving us a broad sense of. Part of the assessment of green capitalism from the left has always been that if we were critical of ESG investing and of the idea of renewable energy transition being guided by the neoliberal dynamics of the capitalist markets, that maybe nonetheless these sectors could kind of pose a counterweight to fossil capitalism, and we could have a transition taking place that would gradually undermine or excavate under fossil capitalism and lead it to collapse. So can you talk us through why, in your opinion, that hasn't happened? I'm really interested to hear whether you agree with some of Brett's assessments, or what ways you would like to inflect his analysis.
Sure thing. Hi, how y'all doing? A more loaded question these days than usual. My name is Ajay Singh Chaudhary. I'm the executive director at Brooklyn Institute for Social Research. We do seminars, project programs. If you want to check us out, Google us. You can find our stuff. My main task here is and I also want to thank Natural History Museum and CUNY and Kai and Steve and Becca and Ashley and Alyssa. It's great to be here with everyone and Brett from afar. The collapse of ESG. It's funny, when I planned this out, it was more or less going to follow sort of point by point what Brett had said, of which I am in large agreement, although I'm a little bit more abrasive and pessimistic than he is. Let me just put it that way. But actually, I realized just as I was listening to this for like the 6th time, that I want to start actually by underlining one of the points that he lands at the end, which is in fact that actually one of the points he lands with, and one of the points that I feel like Ashley, you were gesturing to just a moment ago. So the point where Brett landed on, that there just isn't a lot of ROI, right? Return on investment in the renewables sector. And when I say there isn't a lot, doesn't mean there's nothing. It's just, it pales in comparison to what fossil capital can produce. So I want us to keep that in the back of our heads, because I think that'll be very elucidating as we go through things. And the second is not to overblow the exceptionality of the moment. Now, this is probably the worst week to say that ever. But in terms of this particular issue, we see the expansion of fossil fuel infrastructure and fossil fuel investment and fossil fuel support and what's it called? Exploration, extraction, and production just steadily increase. Regardless of administration. So particularly taking off actually in the Obama years, Trump won. Biden years, it fucking really ripped. And now Trump's pulling out all the stops to see if he can possibly make it rip higher, which I'm actually not sure how much higher you can rip. And right now the price of oil is falling to the floor. So keep those two things in the back of your head as I go through the rest of this. Oh, I should probably turn my timer on. Okay, so collapse of ESG. This is one of those ironic things where those of us on the left who are actually fairly suspicious of these categories, because of the way politics is moving so quickly to the right, end up having to kind of defend them a little bit. And I agree with Brett and many of these things. And through a mix of observations in my commentary and some additional analysis, I hope to be able to give us at least the beginnings of some answers to these questions. So environmental, social, and governments. Here I agree with Brett that the environmental part was always the sort of realist. I want to subdivide real into two categories. There's a real part of it that is real and in tune with like generally agreed upon climate targets. And I know we're mostly talking about renewables and carbon and things of that nature today. I always like to make a point to say that, you know, this is just one aspect of the whole big picture. We can have the carbon tunnel vision problem, but it is very useful for this discussion because it's a nice little like microcosm, something we can get our hands on that we can extrapolate out about other things from. So, if you wanted to, so to underline the E being the most important part, we should also talk about why the S and the G actually are kind of just blatantly bullshit. And the reason is not that dissimilar from the one that Brett ended on. The social one has always been kind of a joke. The governance one is, to me, the absolute most funny, and I love this so much because if you read a lot of literature, both sort of not critical literature, like the literature that these organizations produce, you know, brochures, policy documents, memoranda, things like this. The governance part of ESG was the idea that these coordinating firms, so think of something like a Microsoft, right, or an Amazon, right? So they work, they coordinate entire global value chains or global production networks, right? And the idea of the governance part of this investing was like, if we give them the nicely colored like money, it's almost like a Zamalian theory of money, I guess, like the nicely like flavored money, they will actually govern themselves better against the interest of the bottom line. Right? So like, I'm going to lose some margin because I'm going to be a nice guy. You don't have to be a Marxist to have like a healthy skepticism that someone's going to sacrifice margin to govern their own production networks, especially when the speed and incredibly thin margins of global production networks or global value chains is what makes them so profitable. So the second point here, is it pure greenwashing? Again, here we have to ask about these two different modes of real. There's the real that, again, is in tune with holding to, say, a 1.5 to 2 degrees Celsius change in global heating, right? And then there's a real that is not the one that you find in a lot of the natural scientific literature. And that is roughly based on a lot of economic models that say actually the optimal place for global temperatures to fall without losing too much money and, you know, without fucking things up too much is between 3 and 4 degrees Celsius. Now, if you say this in a room full of climate scientists, they will pull their hairs out and run for the exits because, of course, that means you're basically like doing a coin toss that things are actually going to run into the absolute like nightmare scenarios, like you're going to hit triggering effects and cascades that leads you down to six or 7. But it's a smart bet. If I'm a super rich guy, if I, you know, a CEO or owner of a BP or Exxon or one of these kinds of things, which, funny enough, you know, 10 years ago, we're both investing hard in ESG and in renewables. If I'm one of those guys, I can make a very smart bet and say, look, if I get to keep my money and probably not die, and yeah, okay, we have like World War II levels of, you know, refugees and like 7 times World War II levels of casualties, hey, it's okay. So that's the sort of 2 modes of real that exist within this. And one of them is genuinely non-greenwashing. And the second thing to say here is that we're mostly talking about finance and investment. And whereas a lot of the sort of left political strategic hope, I think, was more based on, and I include myself in this category, I've written about the possibilities for this kind of alliance before. I think these hopes were mostly based at a slightly like lower level, not hoping that like the BlackRocks of the world would in fact do the investment, but that state subsidies would be direct subsidies, right, would juice these firms, these people who are not like us, frankly, right? People who are like the innovators, entrepreneurs, move facts and bake things people, but in the clean energy sector, that they could be pulled over to our side. How that ended up playing out is mostly that as Brett pointed out, their equity value tanked, and they often ended up being acquired by the large energy companies. There are different versions of this case, but the hope, yes, is that left-leaning constituencies might be able to form a rickety but real alliance with those sectors of capital. But, and I want to quote Brett here, right, this job in places like the United States was outsourced to the financial sector. And I want to distinguish the US here from two other examples. One would be the sort of very famous German energy transition, which is almost basically now completely dead. But even at its height, if you read the sort of memorandum written by its own designers, when it was at its height of its success, they were like, yeah, we've cut about 20, 30%. This is pretty good. If we go further, it's in there, use publicly available documents. If we go any further, we will hit structural barriers and you will have to accept much, much lower profits, much lower or even negative growth rates, et cetera, et cetera, et cetera. So this outsourcing, and there are a lot of different ways to phrase this. There's a wonderful phrase, de-risking. I love this phrase. I think it's very apt. We can also think of this, the classic socialization of risk while we have the privatization of profit, right? This was based mostly on carrots in the form of subsidies, which did in fact nurture some of these firms that we're talking about, but relatively few sticks. To use that classic balance, right? As through regulatory mechanisms, which would force the stranding of fossil fuel assets, both untapped reserves and the pricey infrastructure, which theoretically should make those assets expensive or even worthless, which results largely in the creation of financial instruments. And actually, this is probably where I will end, just in the interest of time, and say, because once you introduce the creation of financial instruments, every investor's eyes light up like it's Christmas morning, because right now, if you just look at the carbon credit market, right? I can sell you a carbon credit. I can sell you a derivative of a carbon credit. I can sell you insurance based on it. I can sell you all kinds of wonderful products. It creates this beautiful froth. If you watch the market on Wednesday, you saw a little bit of what it looks like when that froth starts to evaporate. But right, it doesn't matter that they're based on carbon offsets that don't actually offset carbon, right? And this is one of the key conundra that this leaves us with. Thank you.
Right, great. Thank you so much, JJ. I'm sure people have lots of questions and will want to hear about, I think you didn't get to the other example other than Germany, right? So maybe you'll come back to that in Q&A. Yes. China direct investment. But that's a nice segue to Alyssa. I wanted to ask you about what the breakdown of green investment tells us about the approaches taken by governments to encourage an energy transition in recent years. What was the model of the Inflation Reduction Act here in the US, the European Green New Deal, and other state policies? Maybe you could give us a sense of those and why they did or didn't work, what elements of them didn't work, and what you think the means for how we should approach the state today is.
Great. First of all, thanks everyone for coming out and to the organizers for putting together a, I think, very timely and important event. So, I think we're all trying to make sense of what's going on, and I will try to do that a little bit. To sort of connect this question a bit to the kind of overarching frame of the panel, the kind of is this the end of green capitalism? I think the sort of recent breakdown of green investment and sort of the shift that we're seeing in sort of state policy right now marks maybe not the end of green capitalism, and I'll come back to that, but certainly seems like at least like a kind of stumbling block for a particular model of state capital relationship that I think is pretty significant because in my view, any green capitalism will require a more significant degree of state intervention in sort of the economy, in some form than we've seen, at least in sort of, in Europe and North America for the past half century or so, which is sort of, there have been inklings of and sort of movements towards, but not sort of a full transition to. And I think the sort of, significance of the state in a green capitalism, sort of green transition is not really a controversial statement. I think pretty much everyone recognizes that, capital is not just going to say, we're going to do renewables of its own accord. There's going to have to be some kind of, nudges, sticks, carrots, whatever, shifting private investors away from carbon-intensive goods and fossil fuels and so on towards carbon neutral or decarbonizing ones. And so the question has been sort of how does that happen? And I think so far in the history of green capitalism, which I think, as Kai noted, has sort of appears as an idea of roughly in the 80s, 90s. And if you look at the Engram, which I know is a not very reliable tool if you're a real historian, but works as a heuristic for the likes of us political theorists, the line starts to tick up, a little in the mid 80s, and then just around 2004 just goes straight up pretty much. It is kind of like the hockey stick graph. But I think there have been kind of two modes of green capitalism in that time, and sort of the first stretch I think of as aligned with a model of what we could think of as market environmentalism. I think of it sort of, there's this great line that Bill Clinton has in a 1992 Earth Day speech that's we use the market to get our environment back on track, to recognize that Adam Smith's invisible hand can actually have a green thumb. Yeah, it's really, love it. So the mechanisms here tend to be these much more market instruments. You either create a carbon market or impose carbon taxes and try to kind of basically, internalize the externalities, reflect sort of the, the costs of carbon in the market in some way. But this model, I think, really, never quite took off. It was hard to green the invisible hand, it turned out. Really hard to integrate various aspects of sort of both ecosystemic function and sort of the negative ecosystemic function of carbon emissions into property and pricing systems. Efforts to impose carbon taxes failed repeatedly. Unsurprisingly, voters, I think, have never been very keen to increase their own cost of living for the sake of sort of nebulous future benefits, especially when those benefits are the planet will stay as it is and you will pay more for everything. So that was a tough sell. And so then, the second model, I think, started to emerge, I would say, roughly, in the kind of in the aftermath, I would say, of the financial crisis, with in the US, for instance, the stimulus bill, which had kind of, a big subsidies for solar development. And this is, I think, the beginning of the shift towards that kind of carrots only model of kind of climate policy that Ajay was mentioning, where instead of making fossil fuels more expensive and trying to sort of bend the cost curve that way, you just make renewable energy really, really cheap, so it'll outcompete fossil fuels. And Brett talked about that a bit as well. There's also sort of major Chinese investments and direct investment in solar in that sort of early mid-2010s period, which sort of also spurs more elsewhere. But in the U.S., it's definitely, the pinnacle is to come back to the Inflation Reduction Act, and to some degree the European Green Deal, where, the IRA model really is that kind of use public money to leverage private investment, right? You are trying to nudge investors towards greener pastures through subsidies and tax credits and so on. Rather than regulation or anything that would dissuade the use of fossil fuels. Ajay mentioned de-risking, and Danielle Gabor calls this the Wall Street consensus. It's the idea that you de-risk private investments into green infrastructure and technologies. You make it easier for capital to invest. They have a higher likelihood of returns with a lower risk profile, basically, and more assurement that this investment, that you will make it and it's more likely to pay off, and that the sort of basically creating a new fraction of capital will work. And I think the IRA is sort of the pinnacle of sort of green capitalism through de-risking. The European Green Deal, I think, similarly, although using more regulation, and I think that is the EU sort of strength, or that is its mode, is regulation and sort of regulatory policies to a greater degree. But in any case, as we obviously sort of at this point with the IRA where question, has it failed, I think, is kind of an open one still. I definitely think it's certainly in a limbo state, right after Trump assumed office, there, he announced an executive order that was supposed to cease various forms of Biden, era climate action and freeze IRA funds. That was overridden, but it seems to be still de facto occurring. But there's still some funds, some forms of funding that may survive in the form of tax credits, because the whole model of Bidenomics, or the sort of IRA, was that some of these tax credits will send, investment to red states, which are also, conveniently kind of like usually low labor protections, that this will be sort of the model, but that will give the staying power in some way. And I think, whether it succeeds and at least like having some of those tax credits continuing to be used will depend at least in part on whether that political strategy, which was pretty explicit, turns out to be right. But I think regardless, I think the moment we're in now points to a more significant failure of that political economic model, which was a shift away from the kind of political program of something like the Green New Deal, and a more like what we could think of as kind of climate populism or social democratic climate program. That, could still be classified in a way as like a green capitalism insofar as it's not necessarily abolishing capitalism, it would exist within that, but is a very different model and form. And so, I think the idea of the Green New Deal, which I've written and worked on, is to consolidate some kind of mass and working class-led constituency for decarbonization through forms of public investment that address things like housing crisis, transit, other kinds of daily life, and sort of, we can now talk about as cost of living issues, in contrast to which the IRA, I think emerged in some ways out of that Green New Deal moment and pressure from the climate left, but, ended up being kind of a backroom deal to create green capital more or less from scratch, backed by clean energy manufacturers, supported even by energy companies with fossil fuel interests, because again, it didn't really have much to threaten oil and gas production, no sticks. So they're like, fine, we don't have much to lose. We have like a renewable energy wing somewhere. So like, we'll take the credits, whatever. So it is real bet. This is a real bet, I think, on the model that Kai was describing, that like, if you constitute green capital, it can kind of like shove out fossil capital. But, in some ways, and it is very much embedded in this kind of larger Bidenomics framework of kind of, emphasizing competition with China as a, sort of program of economic nationalism, inter-imperial competition, and so on. And I think in some ways, my provocation here is maybe that the Biden team put too much faith in the state's ability to serve as the executive committee of the bourgeoisie. They didn't, in some ways, they didn't really do enough to secure political legitimacy. I mean, we expect the capitalist state to act in the interests of capital, both in, various dimensions. And, presumably you could think, well, maybe this is a way to ward off, sort of longer term, or to act in the longer term interests of capitalism as a system, and so on. There are various ways we could think about that. But they, they didn't do much, I think, to secure political legitimacy for what the state is doing. The IRA is really not an instance of popular climate policy. I think it's not known pretty much at all beyond climate policy circles. Only about a quarter of Americans say it benefited them. Less than 3% of people filing taxes in 2023 made use of the various tax credits for like energy efficiency and things, all of which also benefit, middle-class homeowners who can kind of put out outlays to do these kinds of like, home renovations, and overwhelmingly by households in the top quartile of wealth distribution. You could go on and on about the ways that it was sort of oriented towards, kind of sneaking things through in a way, but nobody has to know about it unless you're already like an environmentalist who wants to put solar panels in your house and you have the money to do so. And that really does, I think, open up the space for Trump to come roaring back. I mean, not the IRA alone, but I think this model of politics more broadly, with, sort of to challenge the sort of failure to address the, these kinds of cost of living issues, ways that the state is not addressing challenges of daily life, and so on. So I think I may be out of time. But we're seeing this, I guess to say in closing, like we are seeing this in Europe too. I know I've talked about the IRA and the US example, but, there are right-wing parties now taking aim at the Green Deal as well for, setting regulatory targets without funding them, for putting too much pressure on sort of, farmers and so on. EU officials are also pulling back from many of the most ambitious and aggressive regulatory elements there. And so, I think, we need to, I guess I would say in closing, I don't think we've seen the end of green capitalism. There've been a lot of previous versions of kind of this like hype cycle, boom and bust, like speculative investment in kind of green tech or natural assets or whatever, these different things. And they fade and then they come back. But I do think that for this to, for green capitalism to really be constituted, we would, I think, have to see a more robust return of state intervention on green capital's behalf. And that is still happening to some degree in China, although we'll see how that goes too. So thank you very much.
Thank you very much, Alyssa. Okay, So, Kai, you have been following the world of carbon capture and sequestration. So, you're going to quite literally help us drill down into one of the specific forms of green capitalism that the Biden administration's policies encouraged. And I think also, in addition, it's worth noting, if I understand things correctly, that carbon capture and sequestration are really essential to a lot of the projections that the IPCC and those scientists that you were talking about earlier, Ajay, have given us for how to save the planet, right? So much depends on the idea that we're going to overshoot and be able to suck all that carbon back out of the atmosphere through sequestration and capture. So maybe could you give us a little bit of a sense of how this particular sector is responding to the current moment and what it augurs for the future?
Yeah, of course. So this is where things get kind of sticky, because on the one hand, there's some people who are super duper freaked out. And on the other hand, there are major kind of industry players who are excited that tax credits and that kind of thing are enduring. So I'm going to explain this a little bit and try and unpack this world. Very briefly, carbon capture and sequestration in the sort of Tonka truck version of things is the idea and practice, I guess now, of capturing carbon at large point source emitters. So this is things like ammonia plants, petrochemical facilities, that sort of thing. And if you highly pressurize that carbon, it can turn into a liquid form, which you can then put in pipelines. And then those pipelines are directed towards places where there's a lot of pore space underground that carbon can be pumped into. And the hope is that by pumping that carbon in there, it will be averted from going into the atmosphere, and it will stay there nicely for a long period of time. So there's also sometimes some added benefits of this, that maybe there was some oil in that pore space that you can get out by being pushed out by the carbon. And so there is a little bit of profit to be had with this practice. And so the big thing to know about the CCS industry is that it's actually not really an industry unto itself. The major players in carbon capture and sequestration is basically the oil industry. The oil industry had been using a form of carbon use, EOR, or enhanced oil recovery, to get oil out of hard-to-reach oil out of the underground for some decades now. And so once tax credits began to appear and subsidies began to appear in the guise of climate protection and environmentalism, oil industry players stepped right up to bat and said, yeah, we've been doing this for a long time. We have the technology, we have the knowledge, skills. We're happy to continue to do this activity. And so basically, very briefly, I've been studying CCS as it's emerged primarily in Louisiana, which has the most projects of ongoing CCS projects that are in the works right now, as well as a little bit in the DC think tank world, which is where people are more freaked out. I can talk a lot more about Louisiana in particular, but here I'm going to focus on kind of like the responses to this particular moment. So the thing that makes carbon capture profitable really isn't usually getting that extra oil out, which is just kind of like a side benefit. It is these tax credits that exist for any amount of, or for tons of carbon that is sequestered, that the government basically allows oil companies to not pay taxes on their profits. And so these were actually initially passed in the first Trump administration, funnily enough, but they weren't set at a high enough target to make sequestration something that any companies wanted to do. And so it wasn't until the IRA that they were juiced up to a level where oil companies started to respond, and a lot of these carbon sequestration projects were planned. And so this is the 45Q tax credit, which was raised in the 2022 IRA. CCS theoretically not just becomes lucrative, But oil companies like it because it's a nice stable hedge against what's a really volatile market to be in. So if the price of oil drops, precipitously like it has this week, you still have a nice little bit of government money to fall back on, which is good for them or whatever. And so you would think that the only reason to do this activity, though, even if you're not doing EOR, if you're not doing enhanced oil recovery, would be to decrease or avert the amount of carbon in the atmosphere. Seems like the sort of mode of, like the purpose behind this whole thing, right? And so, so consequently, you might think that 45Q tax credits would be one of the things that the Trump administration slashed because it has to do with carbon, the green new steel or whatever else. But it actually seems like the 45Q tax credit will survive the cuts. It's going to survive Doge, going to survive everything else. And the oil industry's behest, and for their benefit. And so this is really compelling to think about in this moment, just because given the scale and extent of state redistribution and cuts that are happening right now, particularly in anything associated with climate and climate science, that carbon sequestration is going to continue to happen. The things that are getting cut, of course, are like community consultation and environmental justice and regulation and all of that kind of stuff, of course. So there are some, that's why the think tank people are sort of freaked out. So I want to ask what could this possibly mean for this big question about the potential end and a kind of end of green capitalism? So we could just say it was ideology all along. This was a dirty industry. It was oil. We pull the mask off. It was oil all along, right? In the Scooby-Doo sort of way. But if that were the case, then why would the oil industry still be actually doing these projects, right? It's kind of like a weird thing. We could say that the oil industry is actually a kind of reactionary environmentalism. They're doing an eco-fascism, and I don't know, there's some of that floating around, but that's not really why they're doing CCS, which isn't the reproducing the German forest or something. It's an industrial process. So I think that I've been speculating two reasons, and it could be both, and it could be an either or. So first is that the tax credits are surviving as a way for the Trump administration to leverage a segment of capital into acquiescence for what they want them to do for something down the line. I don't even think that leverage has to be tied to political favors or anything. It could just be, we now have the oil industry dependent on this government spigot, and we can then do this kind of thing that they're doing with the tariffs and threaten to turn that spigot off at various different points, which would be really, really annoying if you've invested billions of dollars into pumping this carbon underground and all of a sudden the tax credits go away. So the green aura then isn't really useful when what is happening is really just money changing hands between states and firms. You don't even need to tell the story about environmentalism anymore. Actually, that hurts. And so we're just going to actually talk about carbon capture and sequestration as extending the life of our beautiful oil industry. The second thing, though, it could be an actual economic process, an instance of the old Keynesian line about paying people to dig holes and fill them back up again, quite literally, that is what is happening, filling them up with carbon in this case. And so the sequestration would just be a side effect incidental to the actual infrastructural economic activity for the pure sake of infrastructural economic activity. It doesn't really matter if it works. We're just helping these oil companies dig pipes to go underground and put some carbon in there along the way. So from a big picture perspective, to wrap things up, I think that this kind of throws into relief the idea of both green capital and fossil capital, given that I'm talking about oil companies doing green activity, right? Or purportedly green activity. Fossil fuel firms have been diversifying for years, not only with CCS and renewables, but also other wacky stuff like bioenergy, obviously electric vehicles, hydrogen production, and some of that stuff is surviving from the Biden administration as well. And so I can talk more about what this means for political strategy and the like down the line, but I think I'll end there. Thanks.
Thank you, Kai. Thanks, everyone. So thank you all for coming to this event. I'm sure we're all feeling like there's just an incessant an overwhelming series of bad news, and you came out to an event called the End of Green Capitalism. Maybe we should be dancing on its grave, you know, the end of the oxymoron, and asking what's coming next. But it can also feel so overwhelming to add that to all the other really, really horrendous news that we are confronting every day. So, you know, we're very cognizant of the need to think about what the implications of the scenario that we've painted, which is obviously in many ways a very dark scenario, are for the current moment, and what it means in terms of strategic choices and options for the left and for working class people, both within this particular country and more globally. So we're going to have a roundtable conversation for about 15 minutes or so, and then we're going to open things up to questions from the audience. So hopefully you're thinking of some questions in response to the panelists' really interesting engagements with the question of the different ways that green capitalism is ending. But let's open up, and I'm really interested to hear your thoughts about, you know, what we do in the current conjunction.
So I'm happy to start, since I just did. So the interesting thing about the CCS train then is that, like, and this relates to basically a broader kind of like lack of imagination, of political imagination right now, that we see everyone across the political spectrum complaining about red tape, you know, like it's 1982 or something like that, from the Doge boys to like the abundance liberals to whatever the on the political spectrum, the Damage magazine people are. It's just like, we want to build stuff again, and we want regulators to get out of the way. And yeah, exactly. Yeah. And so in a world where everyone is saying that, I think that there's actually a lot of political potential to organize with people who are you know, pissed off about this kind of stuff and standing up to say no, not like, you know, not necessarily regulators who are getting fired, but like actual people who are in the pathway of these pipelines. So yeah, I'm doing the kind of thing, which is just like, I hang out with people who don't like pipelines and saying that they're right. But like, also there's actually a really interesting political potential in Louisiana, for instance, where on the one hand, we have some, you know, of the people you would expect, environmental justice groups, Native nations, former oil and gas workers, who are kind of like, this carbon capture stuff doesn't really make sense in the bayou. But on the other hand, you also once again have a lot of like reactionaries who are getting this stuff plowed into their backyards, and they think that carbon capture is like a Joe Biden scam or China or something like that, and are meeting at these same sort of public meetings and public spaces to oppose this infrastructure. And I think that there's actually, that these are fluid situations where I'm not saying we need to do entryism or something like that, but like, if we have an understanding that there is potential for these to be more than just like momentary, you know, movements, that actually they can be places of, you know, working class orientation and sort of self-consciousness and the like. You know, there's some other kind of like funnier and worse versions of this. In Wyoming, there's a Make Carbon Dioxide Great Again bill, which would forbid any carbon reduction efforts. But in South Dakota, where I grew up, they've actually been able to like pass laws against eminent domain that basically inherited the same structure from what we were fighting against with the Keystone XL and DAPL pipelines. And so I think that, I don't know, that there's interesting potential there, and that in that terrain, to not take the side of the oil companies necessarily, and to like organize with these incipient energies against the sort of infrastructure build out.
Great, thanks so much, Kai. Alyssa or Ajay, either of you want to jump in here?
Yeah, I guess I'll sort of follow Kai and think, like, I'm the guy who like hangs out with people who don't like pipelines, and so they're right. Well, I guess I'll say I'm what I will say is, I think a lot of, I mentioned the sort of deviation from the Green New Deal strategy, and I do think that has maybe been proven more right, or that you need to have a climate policy that actually addresses people's needs in a direct way. And I think it really makes the case for something like, again, like to the term of the moment, the kind of like cost of living green, green program or whatever. And when you look at, there are points where, if we think about, like, I was reading one of these, like, Trump kind of, like proclamations about things like EV mandates, which, are really bad. Like California had an EV mandate that every, you can only buy EVs after I think like 2026, but does nothing to like make that an affordable thing for people. EVs do tend to be a lot more expensive than kind of, internal combustion engine powered cars. There was no sort of, it's kind of a mandate that's like, we're moving in this direction, but in a very just like, we're doing something way, but that does not actually address the ways that people are not going to be able to do that kind of on an individual consumer basis. And the people who are going to be able to do that are, wealthier people. So I think there's so many things like that are just like huge, like own goals for like progressives. And so these are the things that I think we need to be addressing, like a program that actually is, recognizes that things like transit and housing and the unaffordability of those are need to be and can be part of a broader kind of like remaking infrastructure and built environment in ways that makes, the country more livable and affordable for people. And also that moves towards decarbonization. I think those things really can go together. And I think the thing that is, exciting is right here in New York, Zora Mamdani's campaign for mayor. Fast and free buses is like the easiest thing you could do. Buses are so much easier to do than like subways. Subways are great. I love the subway. But like if we did fast and free buses in every city in America, that is probably like the number one, kind of like thing you could do to just kind of make it easier for people to get around without cars, to move away from an EV only, even like a car centric thing, but also so even like the kind of EV model, which, EVs have many problems, which I won't go into here. But that's the thing that, I think we really, these things that don't have to be actually that complicated as starting points. Is that enough? No, but it's at a starting point in a way to show like your life can be a little bit better and easier. And this is also like a climate policy. Other things around, building more housing in dense areas and making that like, addressing the cost of rent, things like that are not just on the abundance, like, clear out regulation and let the market rent model. I think there are a lot of other ways to think about actually, again, like public investment rather than just kind of like, how do you use the state to like help the market work better, that we really have not done or tried, but we should. So, I think there's a lot more evidence that to me, I mean, again, like I would say that I have said that, I continue to think that, but I do think it's true. And I do think that we need to kind of figure out what we don't have to call it the Green New Deal anymore, because that's like, no, whatever. I don't care if we call it that, but some version of that program, I think we need to reconstitute around.
Great. Thanks so much, Ajay.
All right. I'll try to go as fast as I can. I kept on adding ones that I listen to everyone talk because it's such good stuff. Because I think the first one I want to start with actually is something that Kai mentioned it, and it touches back on what Brett mentioned, which is the question of like, is this just ideology? This is something very much in my wheelhouse. And one thing that when I say there are like two versions of real, that's kind of what I was getting at. Like one version is just ideology. The other version is like, oh, we can play ball. Let me put like, so like there is a distance there. But also something that Brett talked about was the optics power, right? That there was a period of time. I do think it actually ended before. Actually, I think he also dated it to 21. Ended before the change of administration, where investment houses would look bad, right? This is ever so slightly different, right? They would look illegitimate, like bad players, like bad actors, like they'd be singled out for charges. And then this just totally proved to be false. Right? As Brett mentioned, pension funds, sovereign wealth funds, et cetera, looked at that and they said, hey, let's do it. The IRA, I think we've covered it pretty well, actually, but I'll also say that whenever I think about things like the IRA, and then this also gets to CS, I often joke that sometimes nothing is better than something. And namely here, like if we have this vision of just completely electrifying the existing US economy, not reconfiguring it the way Alyssa just described, to emphasize things like mass transit, affordable housing, healthcare, childcare, elder care, et cetera, et cetera, et cetera. If we're not doing that major restructuring thing, we're just like, oh, we're going to do exactly what Americans do now, but we're going to electrify it and we're going to have electric cars and all this stuff. There's just not enough It's just an insane process, right? If you juice EV production, you have so much emissions in the production of the cars, so much other extraction, particularly things like cobalt, lithium. People know this, to go into the EVs that you maybe don't even want those subsidies. Maybe you just want the clean buses, right, and things of that nature, and for the state to invest in them. Which brings me to point the second or whatever point. My numbering system got a little screwy. The funniest thing for me, and I'm so grateful for Kai for broaching the CCS and the negative technologies more broadly. The most funny thing for me about this is that they do not, in fact, lower carbon emissions, period. So if you look at life cycle assessments of carbon capture facilities, so like you'll shove one of these things, they're very intricate devices. They take many different forms. You'll shove it on something like a petrochemical plant or shove it on something like a coal-fired power plant. Spoiler alert, it's not really a spoiler because I'm telling you right now, is that simply producing this technology, moving it into place, installing it, running it, and then storing the crap, which also is deeply problematic, ends up producing more carbon in that process than, in fact, doing nothing. It's one of the reasons the Chinese stopped investing in it, but kept investing in renewables, which I'll come to again in a moment. The next one, I'm just going down a list, so I'm just going to try to do it as fast as part of the tariffs insanity that's going on right now is, in fact, explicitly, and the administration has said this, and this is frightening in a way, but not as crazy sounding as I think a lot of the other tariff stuff has been. Part of it is, in fact, to get the world to conform to American regulatory standards. And what I mean by this is, for example, particularly with Europe and China and a few of these key trade partners, it's like you have to lower your ag standards for us to lower the tariffs on you is one of the asks. You have to make more friendly overtures to our energy sector. That is, and if you don't, the tariffs stay up.
Can I give a really funny example?
Oh, please, go.
It's like you have to make your roads big enough to fit a Ford F-150,
yeah.
right? So that, yeah.
Yeah, so like there is like sometimes method to the madness, even in the maddest parts of the right. And so we're almost at time. So the last thing I'll say is I want to echo and underline Alyssa's point about the importance, and I know this makes some leftists uncomfortable, of state intervention. And here I will point to the example of the People's Republic of China, where it's just the only country that basically has a plan. And like it may not be the best plan, but it is a rational and reasonable one, especially for a middle-income country. And why hasn't their renewable sector gone on? In fact, it's flourishing like fucking bananas. It's just because they have such strong disciplinary power over capital, and we've really seen this. And the last thing to say is, and this is echoing both Alyssa and Kai, and I actually originally had this as my end, and so it's really perfect, is like, there's that famous saying from Mao, which I'll paraphrase, right? Everything under heaven is in chaos. The situation is volatile, but that means there are new class fractures within the capital class that potentially we can take it hijack for our purposes.
Great. Thanks so much, Ajay. And very quickly, I'll just say that if green capitalism was basically about hoping that the market was going to make the transition, and the state giving various different signals or subvention to capitalist sectors to make energy transition and other elements of saving the planet take off. The fact that it's now collapsing shows that we need an alternative. And as you just pointed out, we have a clear one, and that's there in China, but it's also here in New York State. So I've been involved with, and I've been involved with the Public Power New York campaign since it was founded. A year and a half ago, we had this great victory in getting the Build Public Renewables Act passed, which mandates that the New York Power Authority build out power. We've been fighting to make the state do what it's now mandated to do. It's been a hard fight, but it's a signal kind of victory for the idea that we actually need to have a kind of command economy doing this, and we need the state to step up and do it. And I think our success here has implications for many other states across the US. It also has important implications for fighting the Trump administration, because as I mentioned, they're trying to shut down state level resistance, and climate action. So fighting against that is also a really important way of fighting, what is now a federal government controlled by the extreme right. And it also has implications for international solidarity, right? Because there are organizations like Trade Unions for Energy Democracy and the Transnational Institute that are trying to think about public power and about the kind of alliances, South-South alliances or alliances between the working class here and an organization like Public Power New York and global South countries that are going to be building out their renewable sector and making transition to a more sustainable footing, not using this kind of green capitalist strategy. Think, for instance, of Colombia, which has large fossil fuel assets, but has said that it's not going to keep extracting. Okay, so I'll stop there. We have a couple of questions from Zoom, but I want to give people in the audience a chance to ask questions if they'd like. So we'll open it up. Okay.
Thank you so much. I guess I want to ask about the sector of green capital that the IRA tried to sort of bring into being, and maybe sort of ask how certain we are that it is in fact dead, and that it isn't able to sort of kind of become part of the coalition in the Trump administration. And I think about people like Chris Wright and Doug Burgum, who, to my mind, sound a lot like the Bidenomics people when they talk about energy policy. And I guess I just wonder if they're kind of being stymied right now. They're not able to bring energy dominance into being. But if Trump's strategy doesn't work and he's not able to, revive coal or whatever, is there a chance that the Biden strategy of like red state IRA investment pays off and it somehow survives?
Do you think we should take a couple of them? That way we can.
Yeah, I think that's a good idea.
'Cause otherwise, we're just going to all talk about everything, and then you can pose. Okay, that's a lot of questions, but yeah, okay, let's do it.
Hi. So something that I'm like struggling with, like as a pessimist is yeah, a lot, is like the localization and limitation of like Green New Deal style reformism to local and state arenas of political like policy, despite the like global dimensions of the ecological crisis. And then on the other hand, I'm also like concerned about how the United Nations as an international forum for climate action has been like co-opted. Like I'm thinking about COP29, and also its ideological foundations destroyed because of the Gaza genocide. So I'm thinking about like what openings, if any, do you all see for the climate movement in the US to resume a national scale with international horizons, and as well for international activists to wage struggle outside of the bodies of like the dying liberal international order?
Thank you, and thank you so much. I have a question. I think it was skipped over just in the interest of time, but I would love to hear more about the like China's plan in renewable development. I've been living in Brazil for the past few years, and China's development in wind power, especially in the Northeast, is super, super visible. So I'm interested in just how China's thinking has differed from the US and what that offers in terms of opportunities or criticisms.
So yeah, we'll do this round very, very quickly, and then take a couple from online because we've got a hard stop. Do you want to start with the China one, since that one?
Oh, I was just going to run down.
Oh yeah, you can do all of them if you want to. That'd be great.
Well, I thought we were all going to do.
Yeah.
Okay, never mind. It won't take long. Is the IRA sector dead? No. There's a really great, I'm going to mess up the quote, but I'll call it a paraphrase then, from Adam Tooze, that Bidenomics is just Trumpism, but polite, or it's like Trumpism for polite people. Is that what he said? for thinking people. Yeah, MAGA for thinking people. It's perfect. Yeah. And I think many of these, as both Alyssa and as Kai have pointed out, many are actually are going to survive for both leverage reasons and also for the fact that they are nurturing industries in places like Arizona and Texas and things like this. Ironically, some of the biggest renewables built out in the United States is in places like Texas. Often the energy is being used to do what? To actually increase the capacity for oil and other natural gas and things like that, extraction. Number two, localization versus sort of national scale. I mean, I'm sadly old enough to remember the old slogan, the think global, act local. And I do think that there can be a retreatism to just only thinking in the local sphere. And I completely agree about the sort of discreditation of most international institutions at this point in the wake of during the ongoing Gaza genocide. I often think of that as basically the model of right-wing climate governance for now and for the future. And so what are the possibilities? This is where I do think that there are geopolitical possibilities and based on the solidarities that Ashley mentioned towards the end, where you can actually see it right now where people who are oh, we don't actually want to completely end interconnection and trade, maybe can be pulled a little bit towards the green side, but who knows? And then finally, PRC on wind and solar. It's very straightforward. They tried everything. They tried to build nuclear real fast. They were unable to. They tried carbon capture and discovered it didn't work. And renewables were for the exact opposite reason, right, that we started with, right? They're oh, it's cheap and easy. We do need to transition as soon as we can. We're going to set this as our goal, and this is our sufficiency level. There are sufficiency level targets in the last 5-year plan, things like this. And they were well, this works like gangbusters, nothing else does, so we'll build it out, and we're more than happy to export it to places like Brazil.
I mostly agree with everything Ajay just said, so I'll just say I agree, yeah, on the kind of, I think a lot of it will last, and green capital is maybe not as, it's not as successful, or maybe it will not be as successful as it would hope to be, but there will be some toehold or foothold or something. I think that, again, in some, future moment, maybe will kind of become more robust. But I do think at the same time, and this connects to the China question always too, we'll see what ends up happening with the tariffs, but tariffs are going to make it much harder for the U.S. to decarbonize and to get these industries off the ground because of the supply chains. The U.S., there's been some factories built and some kind of investments made in the U.S., but the degree to which I think, in renewable energy, but also in various other forms of sort of green tech supply chains rely on production in East Asia and China in particular. It's just it's just, I think it's going to be very hard to figure out how that actually works. And then I think, I guess I agree also on the localization question. I feel I always feel a bit of when we're all right, back to the state and local level, it is depressing. But, I think it's figuring out, hopefully, are there models that can then scale it various ways? How do you figure out what is a winning strategy and actually doing it? And, I think it's maybe not the worst thing that the UN is totally discredited. That has been a useless process, frankly. And so nobody believes it anymore. And that is, in my view, honestly, for the best.
Yeah, I just want to say one thing about the could it still work question. I think that there are two things that I said I'm going to say one thing, and there's two aspects to what I want to say in that one thing, which is, first of all, I think that I'm still a bit worried that that the form that this stuff takes is really always about disavowing any sort of actual ecological impacts, of this kind of stuff. There's carbon accounting, but there's really to the extent that the fracture of capital in green capital works, it's disavowing its greenness. It doesn't care about running over fluffy bunnies or making cute fish go extinct or anything anymore. And so that's one thing that I think is on the table. And then the other is just that we have to remember that and I think that I got tripped up on this in recent years, that though there are segments of capital, they can also recombine. you know, and so one of the things in the CCS world is like there were some CCS upstarts that like had green ideas and then they just got bought out by the oil companies. You know, so I think that could still happen in other green worlds as well, where if the fossil fuel firms see the writing on the wall, there's no reason they can't just buy, you know, they've been branding themselves energy companies rather than fossil fuel companies for years and years. So that's could be one avenue of backslide as well.
Okay. So we only have a couple more minutes to go. So I'll try to synthesize a few of the questions that we've been given online and ask you each to pick maybe one and respond very quickly. So there was one really kind of foundational question which I wanted to get on the table, and that is, why is renewable energy not making money? Right, you know, kind of the beginning of our whole conversation, and Brett's intervention was that renewables weren't making the money they were anticipated to make. So that question. Somebody else also asked, you know, do we have a climate crisis problem, or is it actually an overconsumption problem? So how do we think about this? Might be something interesting to ask. And then somebody else asked about, you know, are we really seeing the end of green capitalism, or are we seeing its transformation? And how do we think about this, particularly in light of theories like Quinn Slobodian's Crack Up Capitalism or Yanis Varoufakis's take on techno-feudalism? Okay, we have like 2 or 3 minutes, so tackle those things and do it quickly.
Well, I'll take the last question, the transformation question. I think that it's just, we can't tell until after the fact whether and to what degree is something new is emerging, or whether it will actually backslide, you know? So it's really hard. I would say that like, my commitment is to stop saying green capitalism, but also stop saying fossil capitalism and act like that is a separate segment of the world. Yeah, I think it's better when we sort of get to the deep reasons why it's capitalism as such that is producing these inabilities to respond.
Yeah, I'll say a bit about overconsumption and try to give a very brief summary of Brett's very complicated book. So overconsumption, yeah, it's definitely also an overconsumption, or like research, you know, there are like many elements of the kind of ecological crisis, of which climate is sort of the most, you know, well-known, visible, maybe acute, maybe not even acute. But I do think a lot of the things that are, you know, again, if we shift from a kind of just energy swap out mode of the kind that Ajay was mentioning to a kind of more like, how do you move away from just like a car-centric society to like a fast and free bus society, you can address, again, kind of like, what is like the PETA approved phrase, feed 2 birds with 1 scone. So cute. Yeah, they have a whole list of like how to not say like animal harmful things. So I don't remember the rest, but I always like that one. So, you know, I think there are like ways that we should be thinking about how do you address all of these kind of simultaneously, rather than just kind of, again, like swapping one energy for another and leaving all of the other forms of kind of ecological problem intact. So renewables, I think there are different dimensions. Like what Brett's book is really good on this. And that's actually about electricity generation specifically. And a lot of that has to do with the way that renewables and the sort of demand and, you know, kind of this, the constant thing people say about renewables is like when they're available, but the ways that that's structured in electricity markets basically makes renewables sort of like you know, they're not a reliable enough source. You often end up using oil to power electricity generation. And the times at which renewables are sort of usable end up often being sort of the points when the cost is lowest. This is like, it's actually pretty complicated, but it's like it is like pretty consistently renewables end up being very bad for electricity generation in particular. But then renewables more generally often, you know, it's like it is an industry where you build it, once you install it, there's like not much to do. They're just there. They just generate energy. And they are not like, you know, you're not like having people go out there and you have to, they just are doing this. It is very cheap. It's like they're just like, you know, transferring like free solar energy, and there's not a lot unless you can just like really command rents on it the way that oil commands rents. It's really hard to make that profitable.
All right, I'll try to do this super fast. Alyssa, Kai, thank you. Yeah, that's exactly. Why is renewable energy not making money? They can't sell you the sun, right? They can only sell you the installation. Overconsumption, yes, but we should always talk about whose overconsumption. Even in a place like the United States, I've done the math. We are talking about like a more sustainable world is a better world, cost of living wise, standard of living wise, style of living wise, for everyone below probably the 80th percentile or something like that. It's pretty wild because we're a very, very unequal country. And then finally, the green capture transfer. Yes, I do think these green sectors can be captured. As Kai pointed out, this is indeterminate. We don't know what's going to happen. One thing that I have written about and thought about quite a lot is the way in which the right, in fact, does use these things to as part of its own strategy, both for capitalism and also for the sort of more irrational, let's say, parts of the right. Oh God, I had an actual ending point on this, transferential climate governance, but I forgot there.
That's fine.
Yeah.
Okay, cool. I'll pass it off to you, Kai, to wrap up and then hand it back to Becca.
Yep, that's right. So yeah, thanks everyone for being here. We're going to stick around and say something, but we do have to give extra thanks for a virtual audience, the several hundred people who are maybe watching online. So we're going to pass it off back to Becca with the Natural History Museum, who's going to give a send off for them. And then we can hang out and talk. Thanks.
All right, I just want to thank our panelists for such a rich and frankly urgent conversation. So thanks to Ajay, Singh, Chaudhary, Alyssa, Battistoni, Brett, Christophers by video, and Ashley Dawson and Kai Bosworth. And really thank you all who joined us for this, both online and in person. We would love your feedback, so please take a moment to fill out the short survey or poll that popped up on your screen. Just to let you know, we're going to email everybody who RSVP'd with the full recording and transcript, so keep an eye out for that early next week. And we will also post the video online at thenaturalhistorymuseum.org. Keep an eye out for our next event in the Natural History for a World in Crisis series. It's going to be coming in late May, so more details are coming soon. I want to thank our sponsors, the Luce Foundation and For Culture, our awesome production team at the Natural History Museum, Andrea and Steve, our Zoom tech maestro, Cal Moody from Alluvium Gatherings, and to the team at the People's Forum for all that went into hosting and for the great camera work. If you enjoyed this event and you want to hear about the next one, subscribe to our email list at thenaturalhistorymuseum.org. And now we're going to close you out with a song, Son of the Sun, by Micmac songwriter and activist Willie Dunn. Thanks again. Take care, be safe, and be strong.
Son of the sun, son of the earth, the soul of life, children of the world, daughters of starlight, and daughters of mirth, sisters of sunlight, sisters of earth, brothers of nature, brothers of old, brothers of legend, and the story untold. I had a dream a mile across. They laid to rest the gun and the sword, buried the hatchet, buried the snake, bowed to each other, peace to make. The earth supplies and nature feeds, but we turn and quake for artificial needs. Come down to earth and stay a while. The sun is shining, just sit there and smile. I'm a brown-skinned man That's what I am. Got a guitar and a drum. That's where I come from. Spirit of the sun, spirit of the sea, worthy of the shadow, come shine down on me. Son of the sun, son of the earth, soul of life, children of the world, brothers of nature, brothers of old, brothers of legend, and the story untold. Daughters of starlight, daughters of earth, sisters of sunlight, sisters of earth. I had a dream of mild and cold, and they to rest, the gun and the sword, buried the hatchet, they buried the snake, bow to each other, peace to make.